Stock market crashing. Did it? Stay tuned. All right, now I know last week was an extremely exciting week. Well, I guess that's going to be depending on what side of the fence you were on. But we did have a tremendous stock market correction up and down. And just so you know, folks, when the market's going up like that after it's radically going down, that's known as the plunge protection team. Let's just say it's the Federal Reserve that has an entire floor of traders and they're trading fake currency because they don't own anything, but they're the ones manipulating the markets when we see tremendous corrections like that. So keep in mind, even though we're having some tremendous volatility, this is nothing that we haven't been informing you. So I do want to welcome you back. We're going to get into a little bit more data that's kind of away from the Chinese and away from the rest of the world. And what I want to do is get into data that is more current in the market system itself, showing where cash flows are going, the liquidity of things, but more importantly, where it looks like the next wave is going to cycle into. And I think that's why it becomes important. So, before we get into that, I do want to say welcome. And this may be, I don't know if it's going to be this week, but soon we are going to be welcoming our brand new audience at TCT Television. Right now, we're currently on the World Harvest Television as well. We just want to welcome all of our new viewers, and we thank you for being a part of the wealth transfer. The wealth transfer is about transferring the wealth from the wicked to the innocent. Goes into Job 27. Go ahead and read that. That's a pretty interesting thing regarding silver. But I do want to get out of the global, let's just say the more European or the more Asian dynamics of the finances, even though those are going to have a direct impact on our market system. I actually think the biggest one that's going to come, and you may want to do this homework yourself, but be prepared. I'll tell you, I'll show you in the next few weeks. It's the Italians. And the Italians over in Europe, their banking system and economy, they have over $1 trillion, folks, in debt that would, if they had to have a bailout, would need some assistance, and I just don't see how Europe can do that. So we could see, not only from the last couple weeks, I was showing you the Chinese data from reflation back down to below zero. This time, I think it's going to be the Italians as well. And so you can start to kind of connect the dots. That's what I'm here to do, is help you understand and connecting the dots. So we want to get into some data here relating to our market system. But before we do, let me just mention this. We would like to engage people a little bit more with our Twitter as well as our Facebook page. You can go to the Facebook page of Cornerstone Asset Metals and like the Facebook page there. Go to Twitter. If you're not a Twitter person, I totally understand. But I would say go to Twitter and open up an app, or at least register. You're going to find that when we tweet out, it's extremely relevant headlines that if you read through them, you'll start to connect dots that I think will help you prepare for what's coming in the future. But what we are going to do, because we do want to have some fun with this, apparently you can't really do it as fake as they used to as far as getting likes and people to follow. It gets a little more complicated these days with algorithms. So we want to introduce what we call a widow's mite. And for many of you in the Bible know what a widow's mite is when little becomes much when placed in the master's hand. So what we want to do for those folks that are going to go to Twitter, if you like us on Twitter, we are going to send weekly to a Twitter follower and a Cornerstone Asset Metals Facebook page follower, a 1-ounce silver coin. We're going to randomly pick them, and we're going to send a coin to people. So we call it a widow's mite, but when little is placed in the hands of the master's hands, many things can happen. So we do want to encourage you, like us on Twitter, like us on Facebook at Cornerstone, and we are going to pick weekly a follower from each category and send them a silver coin. So God bless you, and we look forward to engaging a little more. It's more of an active newsletter, and I think it'll be relevant not only in the fast-moving news cycle we have, but more of a straight-up news cycle, and I think most of you know what I mean by that. So what I want to do is start off when we got into the Chinese data. In the United States, we call it like an everything bubble. So, for instance, here is a graph. It's called the everything bubble, but financial assets relative to disposable personal income. But really look at this hard when you go back all the way to 2000, where we had, now I'm just saying in the Shemitah cycle things, when we had the corrections. We had the dot-com bubble, then we had the housing bubble, and then notice the everything bubble on the right side. And that's a very big deal because of the amount of money in printing we have put into, basically into the financial system. And so it's something we have to be cognizant of. But I also want to show you where I'm basing that the market's getting ready to change. We're getting ready to see a shift in, let's just say, liquidity and capital flow, not just in money coming from other countries, possibly into the United States because of the new tax laws and incentives that way, which we are seeing, of course. I mean, some of the greatest news we're seeing, this tax cut is bringing money to America, is bringing jobs back to America. Now, the Republicans have jumped ship on the idea of a balanced budget. They spent hundreds and hundreds of billions more into the deficit. Folks, I contended when the president took over that he might as well just print to make everything great, because the currency system itself is on the verge of an implosion of valuation. And globally, we're ready to see that in the fiat world. So we want to keep that in mind. But I want to use this through debt used to maintain a standard of living. Now check this out. This is really an important graph. You notice in the green on the left, it ends roughly after the 1987 stock market crash. And you notice the red going to the right. Folks, that is unbelievable. Basically, what you're seeing is a gap in between the cost of living and what we are getting in wages. And look at that dramatic drop that we are seeing. Now, the consumer credit is the black line running up, and then the green and the red is the gap between. And look at that credit booming. So people, we are doing nothing but living off of credit. What does the Bible say? Now, come on, we all are doing it. We know we all have to, we're using credit to our advantage. But look at the staggering amount of credit being consumed since the 87 crash. And then yet look at the cost of living to our wages. Folks, no matter what they try to tell you that your wages keep up with the cost of living, therefore inflation and all this is irrelevant, think again. Because what we're getting is more or less an image of, are we being, well, let's just say this, is our buying power sustaining? Is our buying power at least close to the wage increase and to what we're able to get for that dollar? And the answer is going to be no. And if you saw on that chart, we have to use more and more credit just to get by. And yet over these last 2 decades, we have been, as you can see, massively decreasing in our ability to have a standard of living compared to the wage growth. So something's happening. And what is that? It's a dollar debasement, folks, and it's a dollar value issue. And that's what we want to get into. We're going to dive into a little bit more of that. But before I do, let's take a quick break.
Terrorism, a volatile stock market, rising food costs, natural disasters. Every day our economy is at risk, but your assets should not be. Cornerstone Asset Metals is here to help you protect and preserve what you have worked so hard to gain. Whether you have IRAs to protect, 401ks to preserve, or cash in the bank, our accredited asset management specialists are here to support you. Call now and we'll send you urgent information regarding changes to the dollar and challenges to our economy that you need to be prepared for. Learn how easy it is to roll over your current IRA or 401k into a physical precious metals IRA. We can even arrange to have your precious metals stored in a private vault or send it directly to your home. Do not delay. Call 888-747-3309 or register online at cornerstoneassetmetals.com today. Invest in precious metals and create security in your future today. Call now.
Welcome back. So we were talking about wages growing, and as the mainstream media tries to help us understand is that, well, wages grow along with the cost of goods and services, so therefore inflation is really not that bad. Now, in fact, inflation really allows our economy to grow. This is really a big lie, but I'm not going to get into the details of that. Inflation is actually robbing and has robbed we the people of our wealth. It has robbed of our ability to have adequate savings and pass down inheritance to the children's children. And is it to where we're gaining more money, though? We're becoming wealthier? Well, folks, as we're going to get in here, you're going to see it's really the financialization of our country that is the problem. And the financialization issue, meaning the top end is getting, the 1%ers are getting the wealth added and not we the people on the bottom end. So I want to get into a commodities to stock ratio. I want to show you how we're talking about our currency keeping up, our buying power, keeping up with wage increase and keeping up with goods and services. And we know it doesn't. So we all know it doesn't. Now, the media tries to say otherwise. But what we're seeing now in the market system, since we've created so much debt, about $150 trillion in new debt globally since 2008, $15 trillion in just printed currencies, this is something that we have to understand is a capital flow, meaning hot money goes from country to country as interest rates adjust, as the economies boom, as there may even be trades, arbitrage, which they would call it, where you could buy and sell something at a different price for a little profit. It's money moving. Now, we're getting ready to see, after this explosive expansion of credit into our society globally, mind you, 150 trillion worth, we're going to see that the money starts to flow out of certain sectors into others. So to keep it simple, the stock market's booming. Well, not exactly in the last couple of weeks, right? But the idea is this the big correction? Is this the one that we've been talking about? No, this is not. And so this is going to be our dilemma. The actual crash we're talking about, or let's just say realignment or reset, folks, that we're talking about, is probably a 50, I won't be surprised as a 60% correction from where we're at today. I truly believe we're going to see almost the gold Dow ratio that is in some of the work I know that Cornerstone sends out, showing you that either the Dow and gold will be equal. It's just a matter of where that price lands. And I believe that's part of this equation, but I won't get into that today. I want to show how money's moving. So as they're trying to show us wages and our buying power is sustained, we know it's not, because we're out there buying groceries and goods and services. So money flow from the stocks, is it happening now that it's flowing out of the stock market into different sectors? Not necessarily. We had a tremendous amount of what you would call margin. The TD Ameritrade CEO even came out and said that cash was gone on the sidelines, that everyone had been in the stock market. They're all in. And I call that the taxi cab thing, you know, when they start calling a stock, get out. And then, of course, it was pretty accurate timing that the market did correct. But, folks, this is not a big market correction. This is a small one, and this is not what we're talking about. So keep in mind, somebody's playing games, but let me caveat this before we go on. How many of you noticed there was not just TD Ameritrade, but Fidelity and other online services went down during the big sell-offs of the stocks a couple weeks ago? Think about that for a minute. Temporarily, service was down. Now, if you're trying to sell and temporarily the service is down on the website, are you going to sell? No. Do you think you can get a hold of your broker if he has hundreds of clients? No. And you can't put stop losses in. And some of you might have experienced that in this last market correction. So I'm just here to say that's nothing. What you saw right now in this 10% correction is nothing. It's not the correction we're talking about. It's an issue with margin, I believe. Just people kind of taking off the top of their trade. And some of it was definitely money coming from plunge protection that allowed the rebounding. I think it was a message sent to the president, to be honest. So I'm kind of a little more on that side of it. But check this out. This is called commodities to stock ratio. Now, what I love about this is 1971, 1990, 88, 90. I remember after the 87 crash. And then, of course, the peak of 2008. Notice the red circles at the top. Now, and then you notice at the bottom, the blue circles. Now, folks, this is a tremendous chart. This chart lays out how money flows from the commodities sector, equities, and commodities. And look where we're at today on the far right. That's right. We're getting ready to cycle out of equities and into commodities. And I'm not alone. Goldman Sachs and others have been calling for that. So what I do want to know is, are we being told? I mean, are you being told that this money flow potentially can take place? Probably not, because a lot of the commodities are very difficult as an equities broker or a financial advisor to put you into. There are ETFs you can go into. There are some ways you can invest into commodities. But the problem is, if we don't sell out of the stock market in time, my concern is you'll be 20, 25% down, maybe even 30% down. You'll be down too far in your stock account, and you'll have fear, and you won't want to sell. And then to transition back into a commodity side of things makes it even more difficult, because then you're going in at higher prices. So you could substantially lose 10, 20, 30% on the downside of the equity, and then you're going to pay more to buy into the commodity. So I really, really encourage folks, get diversified. If anything, this stock market crash has taught you is overnight this thing can change. And are you diversified? And don't tell me you're diversified in the equities unless you have some strategic short positions on. So you got to keep that in mind. And also focus on the fact that if your advisor has you in certain equity positions that are aggressive, scale back. I always say, take 25% off, take 50% off the table. Get prepared to cycle into commodities, which of course, the biggest one will be that of silver. It'll be the most liquid and the most explosive. Now I'm going to do a radio program, well, I'm not radio program, but I'm going to actually take a piece from a radio program. I'm going to cut it and bring it onto the program probably in a couple weeks. It was with Larry Kudlow and a few major stock market players. And Larry Kudlow was saying, okay, the dollar's going down. We got the stock market correcting. Where will be the next cycle to put money? Believe it or not, this guy said silver. I almost pulled off the road. I couldn't believe he said that. He said silver. He said, listen, Larry, last time that this cycled in the market system, silver had gone up 178%. And Larry Kudlow and the other gentleman was like, I never even thought about that. You can't beat that one. So all I know is if the mainstream supply side dollar guys in the markets are saying, hey, you got to check out silver, that ought to tell you something. If you're going to cycle out of commodities or out of the equities into commodities, I would highly suggest looking into rolling over to the silver and the precious metals silver account. I know Cornerstone would be fabulous in educating that. So I tell you what, let me take a quick break and we'll be right back.
Terrorism, a volatile stock market, rising food costs, natural disasters. Every day our economy is at risk, but your assets should not be. Cornerstone Asset Metals is here to help you protect and preserve what you have worked so hard to gain. Whether you have IRAs to protect, 401ks to preserve, or cash in the bank, our accredited asset management specialists are here to support you. Call now and we'll send you urgent information regarding changes to the dollar and challenges to our economy that you need to be prepared for. Learn how easy it is to roll over your current IRA or 401k into a physical precious metals IRA. We can even arrange to have your precious metals stored in a private vault or send it directly to your home. Do not delay. Call 888-747-3309 or register online at cornerstoneassetmetals.com today. Invest in precious metals and create security in your future today. Call now.
Welcome back. So as we're going to get into showing you how the commodity cycle is coming into play, keep in mind, I'm not the only one showing this. This is raw data. This is stuff that is kind of hard to beat. That last chart, matter of fact, I'm going to show that again because I just love it. This one right here, the commodity to stock ratio. This chart is so poignant on how capital flowed from the equity, which is the stock market, into the commodities market. And I don't know about you, but down there in the blue is lower than it was in 71 and in 2000. So I want to start right into this issue here with the non-financials. This is corporate business, debt securities, liability level. Non-financial increases. Look at that staggering number. Since 2012, from $4 trillion to $6.2 trillion. That is an enormous amount of debt that was issued just in that area alone. And another one I want to pull up to kind of caveat where we're going with money flows is this is consumer loans, all commercial banks and loans. Look at the staggering amount of money that was put into the system since 2012. Now, mind you, the correction and the collapse was in 2008, but this is 2012. Look at down from $1 trillion up to 1.44. People are taking out loans. They're taking off credit. They're pulling off margins. I get it. If you have some kind of a business or you want to do a project, getting money at these cheap rates was smart. But know that a lot of money has been taken out in loans. A lot of margin has been taken out, and credit card usage has exploded. All I know, folks, is if we get the next correction, and I'm not talking the 10-20, I'm talking the 40-50, you're going to regret having that much debt unless you have a sustained business. But you're seeing the strains of how much has been done since 2008, and we need to be prepared. Now, when I talk about equity flows into commodities, basically, when the stock markets crash, they have a tendency to put money into commodities. That's why, if you remember, in 2008, after the market system collapsed, we had oil shooting up to 140 a barrel. We had cotton and sugar, gold and silver exploded, of course. And then they came in with some massive money printing and manipulation to avert a total collapse. Money flows out of the stock market into commodities. And your advisors won't tell you that because they can't do a whole lot about it. Having physical silver as a portion of your portfolio when you're looking from the bottom end of where silver's pricing is to where it's going, incredibly wise. It's called diversification. So let's look at this. This is the U.S. credit market debt as a percentage of our GDP, mind you. Look back here into, what is it, the 19s, like 1970 really. I know this goes back all the way to the Great Depression there on the left, and then it goes up and crashes down into this 50s, 60s, and 70s, and then credit explodes. We come into the 87, the 2000 stock market crash, 2008 stock market crash, of course the 1987 stock market crash. Now we are higher than we were even then. That credit turned up, and we started consuming a massive amount of credit. So if we're consuming that much credit, folks, if we're getting into all in the markets with margin, if we're expanding our standard of living through credit cards, are we really doing ourselves a service considering the data that is speaking of something coming? Now, I'm not so sure about the timing. I'm not concerned about the timing. It's really about what the data says, and when it's close enough, I would rather have a peace of mind and sleep. So let me get into this image. Let me show you this one. This is one I want to kind of leave with. It goes into an actual index showing how the S&P and the commodities and the S&P large cap index work together. And this is a fabulous, fabulous chart to kind of lead off here tonight. If you've noticed in the middle there, when in 2000, the dark gray shaded areas, that's when commodities boomed. And then you saw it kind of scale down, of course, as they started printing money and manipulating the system. Look where we're at on the right. Since 2014, look at the shades. And if you notice the dark brown line, it keeps collapsing lower and lower. That's the commodity index. They were just taking this money printing for a ride and manipulating the system. This chart doesn't get any more explanatory than I don't think I can do it any better than that. Something isn't right. And if you've noticed that the dark shade areas correspond to shifts in liquidity, shifts in market capital, shifts in hot money. This is very important to understand. If this chart doesn't help you see we're getting near a top of some kind, and mind you, it has nothing to do with tax cuts, the jobs, manufacturing jobs, all of this coming back into America. I believe the President Trump is doing a phenomenal job in policy. Problem is the data, the circumstances in the global financial was a tsunami that even great policy changes can't stop, because it's not about us. It's about others. It's about Europe. It's about Asia. And it's coming. All I know is the data is showing that the capital in the system is getting ready to move. And I don't believe this last correction was it, folks. I believe it was just the beginning. Are you listening? So I encourage you, go to Twitter, like us on Twitter. It's Terry Saka, AAMS. Like me on Twitter. Go to our Cornerstone Asset Metals Facebook page, like us. We are going to give away a silver coin each week to someone who is following us. Until next week, we're going to get a little more into showing you how the hot money is getting ready to shift. But until then, pay close attention, pray, and be thinking about diversification. God bless you.